We've got the latest few key pieces of data for the year today. Now, consumer sentiment, one of them, rising in December over 13% to 69.7. That's a sign that consumers were optimistic during the holiday season. This comes after the Fed's favorite inflation gauge, core PCE, showed prices cooling even more than expected in November. Joining us now, we've got Lakshman Achuthan, who is the Economic Cycle Research Institute co-founder. Great to have you here, as always. We got kind of two economic readings here on the day that give us a little bit more insight into how the consumer feels. Plus, we got some earnings data that gives us even more of it color here on the situation here. What would you say is the kind of broad stroke state of the consumer at this point, given the readings that we've gotten?
Okay, so consumer, we're talking economy, that's softening. And you're seeing, there's always, you could always point to one thing going up or down, but I think the general picture is one of softening, and it's a reaction to the higher prices that we've seen, right? So the rate of inflation is coming down, but it doesn't mean the price levels have come down, right? They went up and they're just not rising as fast, they're rising slower. And so that's what the consumer is really struggling with. And you'll see that when you talk about a big ticket, rate sensitive thing like a house or a car, and even in more discretionary things. So something you like doing, but you don't have to do, you might get a little edgy around that. And maybe that flows through to something as literal as athletic apparel, like you're seeing, for example. You're seeing some of that stuff. Non-discretionary stuff, that's solid. Right? So education, healthcare, government, those kind of things, they're really plugging along. And in some cases, if the government really gives it a boost, like building factories or something for specific things, then boy, it's just a boom. Or defense spending now too.
So what do you think this tells us just about in terms of the expectations for potential rate cuts? If we do see a continued improvement on inflation, if we do see the Fed progress with their efforts to tame inflation, the market, though, is very aggressive with what they're pricing in, how quickly they see the Fed potentially cutting rates.
Okay, so
what do you think is realistic?
Yeah, so we're switching gears from consumers, like are we taking money out of our pockets and doing things, and what's the Fed up to, and what is the market guessing about, right? So the Fed, I think for more than a week now, it's been mission accomplished. I mean, in fact, it almost seems like Chair Powell might have had a peek at the PCE core, the numbers coming down, right? And so there, he's saying, hey, maybe I'll do 3 cuts next year. The market's saying, sure, we heard 6. And really running with it, saying mission accomplished. The issue is that both the Fed and I think the market, they like to extrapolate these things. So they're looking at the charts, and this rate of inflation is coming down. So they're saying, hey, it's going to keep going. But if you step back and look at how inflation acts, it actually cycles up and down. And so if there's a turn out there somewhere next year, that may not play along with the current narrative. And so I think right now, inflation coming down, Fed easy, market getting excited, hopeful that rate cuts will support the weak housing that we've seen in the rearview mirror. That's the hope, right? Now we have to just see if inflation really follows through next year and continues to ease.